Hello and welcome. You're watching First Stick here on News 9. I'm Suyash Maheshwari and with me is Amit Ranjan. Now, Indian markets have scaled a new record high in the morning trade. The markets have opened gap up with Nifty scaling 20,950 mark in the morning trade, making a new record high and inching closely towards 21,000 mark. Sensex has also scaled a new record high where broader markets are trading mixed. But we'll, of course, expand more on it later in the show, but let's also look at how global markets are positioned. Amit, over to you.
Yeah, thank you, Suyash. Dow Jones is still in the red, so is S&P 500. So Dow Jones closed in the negative at minus 0.22%. S&P closed in the negative at 0.06%, very marginally. Nasdaq was in the green, closing up at 0.31% in the positive. Going to the European markets, which were in the red still yesterday, were closed in the positive till day before yesterday, closed in the positive yesterday at 0.40%. Hang Seng also is in the green at 0.68%, and Nikkei is in the green at 1.73% today.
All right, so good morning for Asian markets.
And even Dow and S&P, which are in the red, are not that, they're still inching up.
Yeah, I think on a month-on-month basis, they're still up about 4%.
Yes.
And on the one of the best runs for 2023. But looking at other global cues, which are very important for our domestic markets as well as the other emerging markets, the 10-year treasury yields have fallen below 4.2% for the very first time since September of this year, as the latest job data in the US reassure traders that the Federal Reserve is perhaps done with its hiking cycle, the economy is also showing signs of cooling off, which will bode well for as far as the policy outcome is concerned. The FOMC meets next week, so we'll have cues on Fed's policy outcome starting next week, and the dollar index has also clawed back above the 104 mark, and oil prices are near a 5-month low, given the strong US dollar and the demand concerns that are coming in from both US and China. Now this, because of this, oil prices are now about 20% shy of their all-time high of about $96 on the Brent. Coming back to Indian markets, we have opened at a record high. As I mentioned earlier, Indian markets touched 20,950 levels on Nifty this morning. We have given up some of these gains, as you can see on your screen. Nifty 50 as of 9:30 a.m. this morning was trading as up about 0.33% higher at 20,923 mark. So we are holding above 20,900 mark, as you can see, but at the day's low we went to a low of as much as 20,887, but saw a sharp bounce back from there, so that will perhaps bode well for the bulls. Sensex is also trading up about 174 points, sitting at 69,483 mark, just shy of the 69,500 mark. Mid-cap and the small-cap indices, which were showing some signs of exhaustion at higher levels yesterday. We saw a big intraday dip in both indices, the small-cap and the mid-cap. Today they are trading mixed. Mid-cap index is up about 0.5%, whereas the small-cap index is seen facing some resistance around the 14,500 mark. The volatility index, India VIX, is still above the 13.5 mark, so that will be a moot point for the bulls going forward with this session. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President Derivatives Research at JM Financial. Sir, welcome to the show. Thank you for joining us here on News 9. Now, Indian markets have been on a stupendous run. Nifty has added about close to 1,200 points in a matter of 6 or 7 sessions. Overall, looking from what we are hearing, the market is expecting a big pullback. Now, will this pullback be, of a nature of about 1 to 2% from here, or can we expect the rally to continue in the near term, given the strong momentum in the market?
Good morning, Suyash. So, it's been a spectacular rally in the indices, and primarily this has been on short covering, because if you study the options data, a lot of call writing positions have been caught on the wrong foot, right from the strikes of 20 20,200 to 20,500. A lot of unwinding of call writing bets has fueled the move in the Nifty. One more interesting observation is that the FIIs are back in the party. If you look at the cash numbers in the last just 3 trading sessions, we have seen an addition of over 8,800 crores in the cash segment, and even the long short ratio has moved to around 50% from the 20-25 odd percent which we traded in the prior month. So clearly there is strong buying interest from strong hands. My sense is that a base of 20,500 has been set for the December month. Maybe you might have some knee-jerk reactions once you test the psychological landmark level of 21K, but that's a mere trading target which you can have. There are still more upsides to go, as I understand, looking at the broader chart structure and the data parameters which are ahead of the current event.
Now, Akshay, one of the sections of the market that's rallying and driving the markets higher has been the banking pack. Nifty Bank has added about close to 2,100 points in a matter of 2 sessions. Opened at a record high even in today's trade, but has slipped since then because of weekly expiry. What are the levels you will be tracking given that weekly expiry for the Nifty Bank?
Well, look, Bank Nifty has moved too fast and it's been overbought on technical parameters. Slight profit booking is seen on the bank index at the levels of 47,000. One, because we have the RBI event day after tomorrow. So ahead of the event, there is a good chance positions might go a bit light, profits might be taken off the table. Considering the fact it's been a very spectacular move and a very surprising one. If you look at Bank Nifty, 44,000 to 47,000 in just a matter of 4 to 5 trading sessions is, it just is out of the bag. So my belief is there is no reason to worry about today's correction. It's the weekly expiry, as you rightly said. Some profit taking is there, but I just see this as a knee-jerk reaction. Bank Nifty should be back on strong grounds again. The support which I see is 46,750. That's an important support. You can reconsider buying it if you get at those levels. Worst case can be 46,500, where a lot of put writing positions are seen for the current week or the next coming week. So that's a strong base which has already been set up, and it's just a matter of time that 47,000 should be revisited and overcome for higher targets as we move into the December series.
All right. And what's your view on the broader markets? We are seeing some signs of exhaustion building up in the broader markets. We saw a big intraday dip in both mid-cap and the small-cap indices yesterday. Today they are trading mixed. The small-cap index is kind of flattish, whereas the mid-cap index has rallied by about another 0.3 to 0.4%. What's your opinion over there? Is it time to reconsider your stance, your positions in the broader markets?
No, I will still continue to be with the momentum. If you look at the particular behavior of the market lately, it's more of a sector rotation, which I clearly see in the market. It started off with the PSU names, then it moved on to auto, then to banking. First the PSU banking names, and then slowly we had the private banking space participating. I believe that from going ahead, it's more of a stock-specific names which will come across, more the stocks which have not performed in the last couple of months, especially if you look at Kotak Bank. It's come out of the woods. If you see the spectacular move it has registered in the last couple of days. HDFC Bank, Reliance, all these big names are back in the party. So I believe, the money is yet to be made, momentum can be chased, but now the theme will shift from sector specific to stock specific. So here, stocks like Reliance, HDFC and Infosys, these are all names which have been more of a laggard in the last couple of months. These might participate, and I still believe money is there to be made in the next 10 to 15 trading sessions before, normally at the end of the December month, you will see some volumes fading out because of low participation from FIs. So till 20th, 25th of December, you can expect the momentum to continue. There is no reason to take the profits off the table.
Good morning, Akshay. Talking about banking stocks, there's been one underperformer here, and that has been State Bank of India. But if you look at the last 5 days, the stock has risen about 7.65%. It is, as we speak, it's at a 611 mark, inching towards its 52-week high of 629. Now, and from the 52-week low of 499, this stock has risen 22%. So, do you see this momentum continuing? Because if we compare it to the other banking, public sector banking stocks, the big performers, Bank of Baroda over the year has given earnings of 20.21%, Bank of India 22.81%, SBI just a 0.5% increase. What do you make of SBI? Will this momentum continue, or it's just a blip?
Good morning, Amit. So, very rightly pointed out that SBI is one of the names. In fact, I just missed taking the name of SBI because this has not actually joined the party as yet. And this can be one of the names which you rightly picked up, which might be the next market mover. So, if you look at SBI, yes, you very rightly said it's been an underperformer considering the banking space, the spectacular run in major of the private and public sector banks. Here, clearly, long additions are very strong in State Bank of India. I believe the flows are chasing this bank from a momentum viewpoint. Even the 600 mark, where a lot of call writing bets were positioned, they have started to unwind their writing bets. So all the momentum triggers are in place. Technically, a very strong setup in State Bank, as I understand right now. 625 is the immediate resistance which I see, but that's a very important landmark because in 2023, time and again, 625 has resisted for State Bank. My belief is that this time a revisit of State Bank resistance should be a good trigger where you might see a breakout happening in the December month itself. So I'm positive on State Bank. Yes, in PSU space, you should be looking at State Bank. Immediate target is 625 if you are trading, but you can gun for higher targets because a breakout of 625 is soon on the cards, and 650 plus might be what you might be looking at State Bank in the days to come.
All right. State Bank might finally join the party, but another stock that's making big moves in the banking space is ICICI Bank, and the stock has in fact scaled a new record high above the 1000 mark. It's down this morning about by 1%, but over the last 5 days, very strong movement. We have seen a move of about 7% or so. Outperforming most banks except Axis Bank. Is that a stock that could perhaps, move higher from these levels given the kind of exuberance that we are seeing playing out in the banking and the financial space?
Yeah, absolutely. ICICI Bank has come out with all guns firing in last three trading sessions, just from 925 to 1010, an amazing move in ICICI Bank. Yes, some profit booking is evident today as we opened. The reason being that 1000 is a psychological mark. We have visited this level almost after a span of 3 months. So there is some chance of temporary profit booking. A lot of call writing bets are hanging on at the 1000 strike. So a temporary blip in ICICI Bank, but I believe the momentum should resume from here, and you might see ICICI Bank going as high as 1075. In the private banking space, you can also consider Kotak Bank, but because I believe that this also might take the lead and in fact try to overcome most of the banks in the private spaces. So yes, ICICI Bank, which we are speaking of, has a positive setup. 975 to 990 is the range or the support base, and we should be looking at 1075 soon.
All right.
1075 for ICICI, which should be looking at a 975 range for the moment. Kotak Bank 2 and SBI, good time to get in. But apart from these, Akshay, what do you recommend for the investors?
Yeah, so I have a few short-term trading bets. These are completely momentum-based bets because it's a momentum market which are in, and money is there to be made fast. So a couple of stocks, a power grid which has seen a very strong breakout in yesterday's trade, a strong uptrend in place. So keep a target of 232 to 237 on this trade with a stop loss of 213. I'm positive in the power sector, and that should continue in the December month. Havells is a possible reversal candidate. Slight short position still prevalent in this stock. This might be the next turnaround stock because momentum is not yet caught up in the stock. So you can consider Havells to buy for a target of 1357 with a stop loss of 1277. If you need a defensive name, probably pharma space, then Sun Pharma is the name to bet on. A very strong chart structure, long additions rolled to December month. Look at targets of 1272 or 1285. That's the extended target with a stop loss of 1218. Info Edge or Naukri, that's a momentum bet again. You can buy this at the current rate. The momentum is very strong today. It's up by over 1%, and it should be soon hitting targets of 4,800 plus. So keep a stop loss of 4,657 on this trade. And lastly, Kotak Bank, which I mentioned in our talk just now, that's the banking name which I feel is the best among all the private banking names. A very strong base formation. Momentum has caught up with this bank. Has been an underperformer. I'm expecting this to deliver stupendous price return in the very short term space. So consider buying Kotak Bank for target of 1872, extended target 1885 with a stop loss of 1797.
All right, those are the top trading ideas from Mr. Akshay Bhagwat. Sir, thank you for joining us here on News 9. Always appreciate your thoughts.
Thank you.
But Amit, let's also look at the markets, and they are holding on to the initial momentum that we had opened at, and Nifty has scaled a new record high of 20,958 mark, but we have given some gains from those levels. As of 10 a.m. this morning, Nifty 50 was up almost 0.4%, sitting well above the 20,900 mark. Sensex is also building onto the morning gains and in fact has moved beyond the 69,500 mark. The 30 share index has also scaled a lifetime high in today's trade of 69,614 levels. So maybe in the next couple of weeks we'll be keeping a close eye for the 70,000 mark on Sensex.
The exuberance continues.
The exuberance continues. Mid cap and the small cap space, the broader markets in general are back in the green. Small cap is trading flattish this morning, up about 0.05% as of 10 a.m. this morning, sitting below the 14,500 mark. And Nifty mid cap is up 0.32% at 44,265 mark. Volatility has spiked once again. India VIX is up 3.6% and closing in on the 14 mark. Now again, remember, we have not seen 14 sort of levels in a very long time, actually not seen 14 levels this year at all. So perhaps something for bulls to keep in mind. But with that, let's also bring on board Mr. Kranti Bhatini of Wealth Mill Securities. Hello sir, welcome to the show. Now the kind of movement that we are seeing in market, the exuberance does not, at least it's not looking to slow down anytime soon. We are opening at a record high pretty much on a daily basis. Now the market is expecting a pullback, but how big of a pullback will this be? Can we see a 2 to 3% decline from here on, given that we have rallied by about 1200 points on Nifty?
Yes, it's a jubilant mood in the market, and we can see the exuberance and euphoria in the market, and that's what making the both Sensex and Nifty inching towards the all-time high levels. And the beauty in this market is right now at the higher level also, we can see the buying interest is emerging from all sets of the market at this point of time. That's what keeping the market on the higher range. So what makes the markets to pull down? We need to see the whole lot of events that are taking place. The headwinds earlier have become the tailwinds right now. The crude at a very favorable situation right now at this point of time. And the domestic macro as well as micro indicators, quantitative indicators are quite positive for the Indian markets. That's what helping the markets at this point of time to stay at a higher level. But it all depends upon the individual and independent stock specific, whether to take the profit or not. And the beauty in these markets, we are the leverage in these market at the present conditions are extremely low. Be it the case earlier a decadal back, whenever the market inches or stays on the top, the leverage in the market used to be very high. But at this point of time, after a humongous army of people that's participating in this market, legion of investors are supporting this market to stay at a higher range. But the leverage ratios are very low at this point of time. People who are really interested for the long term, they are coming into the market at this point of time. That's what keeping the markets at the higher range. Probably Indian market, if the market comes below, as you mentioned, if it gives back, it's at Indian market at every dip, the money is coming to the market, and that's what making the market to sustain at the higher range.
Now, Kranti, we are essentially pretty much at 21,000 mark, just about 50, 60 points shy of it. And as you rightly pointed out, people are betting in this market for the long term, for the next decade, given that there is some clarity, at least from the state elections to, what the political outcome would be when 2024 general elections start next year. Now, can we rally another 1,000 points of from here, given that the market momentum is in fact so strong? Can we end 2023 at 20,000, 22,000?
Suyash, market was struggling at 20,000 level for quite a long time.
Right.
And once it touched 20,000 level, and today within a couple of days time, less than a week time, 4 or 5 trading sessions, we are just at a kissing distance to 21,000 level. That's what the momentum in this market. Global cues also helping the market to say sustain about this level. So I don't think so. It would be difficult to achieve some 70 points, and Nifty can be possible. It's not a big deal at this point of time, but sustainability is extremely crucial at this point of time, Suyash.
Good morning, Mr. Bathini. Now, there is one big group that has become part of this, added to the exuberance, and that's the Bajaj Group that has crossed the 10 lakh crore mark in market capitalization. Before I elaborate on this, what would you have to say about the Bajaj Group joining the elite club?
Yeah, they joined the big league of corporate groups in India in terms of the market capitalization is concerned. They have a high corporate governance, bets and things on the long-term approach of the market, and very stable business models forayed into autos and financial services, and many of the group companies have extreme wealth creators on a longer term basis. So investors with a long term approach, definitely with the young and dynamic management at the helm of affairs with respect to the Bajaj Group is concerned, and they know what they are doing, both in terms of autos, both in terms of the financial services industry is concerned. So for a long-term investor, Bajaj Group is one of the key wealth creator at this point of time also for the long-term investing is concerned.
You spoke about the Bajaj Group. I think I'll take the audience through how the group companies have performed in the last 1 year, if we can have the graphic. So Suyash, Bajaj is on an overdrive. If you look at Bajaj Autos, 66.16% gains in the last 1 year, 2.22 in the last 5 days. Bajaj Finance, 9.76 percent gains in the last 1 year, 3.03 in the last 5 days. Bajaj Finserv, 3.68% in the last 1 year, 2.69% in the last 5 days. Bajaj Holdings and Investment, 22.73% in the last 1 year and 4.38% in the last 5 days. And Maharashtra Auto, something that probably is under the radar of most investors, 64.86% returns in the last 1 year, 1.33% in the last 5 days. Mr. Bathini, if you can help me on this, which of these do you think is the most attractive right now? All of them are very expensive. I mean, Bajaj Scooters is at the moment at 8,022. Which one would you recommend out of this table for the investors to go into right now?
Yeah, one is the two-wheeler major Bajaj Auto. With respect to the long-term investing is concerned, okay, recently Raju Bajaj made a very remarkable statement and come up with the idea of launching CNG two-wheelers. That's going to be a changer if they are successful in this perspective, because everybody talks about the ICE and talks about the electric. In between there is a CNG. There is a big opportunity. If they could able to successful in this product segment, that's going to be a big game changer for Bajaj Auto is concerned. So for the long-term investors, still the two-wheeler is a big game. They are quite diversified in entry level and also the the top end of the models. Okay, these stocks are not for just a couple of quarters or just for one bull rally. The investors, if they have a very long-term approach, definitely, if anyone want to construct the new investors who are coming into the market or the existing investors, if they want to have a very blended long-term portfolio, definitely Bajaj Auto also do suitable, because always in market the good corporate governance companies and good business models comes up with a expensive price tag. That's what this group always demands. And these business models are very quite sustainable, stable business models. These are not one of kind of blips in the market. Both financial services and autos, they are the strong core sectors in the economy. When we say participation of India's growth story, the consumerism and consumption story, this is the best consumption themes, both the autos as well as financial services. Coming to the financial services, they are quite strong, and the NBFC and the insurance space, what they are into, they also comes up with a expensive price tag. But an investor with a long-term approach, definitely they can accumulate these stocks for a medium to long-term basis.
Now,
At
Kranti,
every
interesting that you you brought up Bajaj Finance, because that stock had come in under a fair bit of pressure after, RBI tightened the norms for unsecured lending. But we are seeing buying interest re-emerge in that counter, where the stock has given returns of nearly 4% in the last 5 days. Valuation wise, is it a good time to enter Bajaj Finance for the short term?
Yeah, for a short term is concerned, Suyash, at dips one can add, and with respect to the medium term is concerned, one need to add these stocks at a very staggered manner. There is nothing to hurry adding these stocks one day in the portfolio at a single go. One need to add these stocks at every dip. That's what the strategy for these stocks. And if the momentum is concerned, one need to have a strict stop loss in these counters also. But by and large, these stocks are suitable for investors who are approaching for a medium to long term returns.
Now, Mr. Battini, moving from one conglomerate to another, Adani Group of stocks, they have been, rallying and rallying, it's nobody's business, because Adani Enterprises in a matter of last 5-6 sessions has rallied by about 40%. All Adani Group stocks have given returns of about 20 to 60% since November 24th. And what are you making of this re-emergence of buying interest in the group stocks? Because of course, as we all know, these stocks were laggards for the majority of the 2023. But, buying momentum is picking up once again.
Sure, there is a great saying on Wall Street. Stocks which are in uptrend, they are, you can say they are innocent till the time they become in the downtrend. And stocks in the downtrend, they are always guilty. So Adani Group, they were in a guilty mode for last quite a long time. And they are showing innocence right now in this uptrend. So the price changes the perception of the people. The statements that came from the US authority yesterday that prompted regained the buying interest from the investors. But these stocks are by and large high beta in nature with respect to their price momentum is concerned. So the investor who likes the price momentum, for the traders who likes the momentum and high risk appetite investors, they can participate in this group, because the reason is you can see erratic moves in the stock prices and they are quite price sensitive, and they respond to the price or information very quickly. So the investors who want to take that risk, this group is by and large suitable in a majority of the stocks. Of course, there are some fundamentally strong companies are there in this group, but by and large, they're all dominated by this price-sensitive information, Suyash.
Now, Kranti, in one word, if you can help us, for the long-term investors, should one buy into the rally or avoid for now? Adani Group of stocks.
With respect to, it's a very difficult question to answer, Suyash, very honest with you. But there are some pockets, there are some value business models they have, like the ports and the cement business, even the conglomerate, the holding company, Adani Enterprises, can be added at dips. There is no hurry if the investor want to invest in these groups, in these companies. Nothing to hurry to go and jump. One can add in a very staggered manner. Probably one can add on dips. That is the best way. But these stocks are suitable for, by and large, for the high risk appetite investors and traders. Those people who don't want to take risk or don't want the high volatility, better to stay away.
All right. If you are risk averse, better to stay away. But momentum could continue, perhaps will continue. That's Mr. Kranti Bhatini for you. Thank you, sir, for joining us here on News9.
Thanks, Yash, and both of you in the studio.
All right, before we wrap things up, let's also look at how the markets are holding on this morning. And Nifty is still holding above the 20,900 mark. And if you can pull up the numbers, you'll see we have given up some of the morning gains, but still holding strong above the 20,900 mark. So perhaps that will be the support for the day that we'll be tracking through today's Wednesday session. Sensex has also slipped below the 69,500 mark. It was up about 0.26% as of 10:15 a.m. this morning. Mid-cap index is also showing some signs of exhaustion at higher levels. The index was up 0.3%, 0.29% actually at 44,252 mark, and the small cap index has turned positive. It was in the red this morning, was flattish around in the first half an hour, and now it's up almost 0.14% and closing in on 14,500 mark. India VIX has also inched upwards. It's up almost 4% at and making the move towards the 14 mark, the highest levels in over a year. But with that, we have completely run out of time on this edition of First Take. Keep watching News9.